Hey Future Millionaires, this is Phil from the Next Chapter team, and in this video we're going to review 4 ETFs. We're going to review a small cap, mid cap, large cap, and then a semiconductor ETF. We'll look at the expenses, performance, see what's in these ETFs, so what stocks are in the ETF, and then we'll look at the performance. And then finally we'll wrap up the video with a good summary, projection of what your account would look like had you invested in these 4 funds consistently over a 5-year and a 10-year span. Please take a moment to like, subscribe, and share with a friend. Also, if there's an ETF you'd like us to do a review on, drop us a comment. Tell us that ticker symbol. You never know, we'll take care of it as soon as we can. Talk to you soon. To start the review, we're going to start with a recap of what an ETF is and how do you buy them. And in today's review, we're going to look at 4 ETFs. First will be an Invesco. The next 2 will be 2 iShares funds. And then finally, we're going to wrap it up with a SPDRÅ sector semiconductor ETF. So as a quick reminder, an ETF is basically a basket of securities that are traded like on the stock market, but different from a mutual fund. Their prices change all day because they're traded all day. Mutual funds do end of day pricing. ETFs, on the other hand, they trade just like an actual stock. ETFs also tend to have lower expense ratios and fewer brokerage commissions. Again, how do you buy the ETF? First, you determine what type of account you're going to buy it in. Usually in either an IRA or a brokerage account. An IRA is an individual retirement account. You open the individual account with an investment broker. Then you decide how frequently you're going to invest. Normally we tell people if you can, go weekly or bi-weekly. Or just in general, stick to how you get paid. Keep it about the same frequency. Then you set up the transfers to be automatic. And then you set up the purchases to be automatic. So you are then investing consistently, systematically, and you're not leaving it to your human error. Again, in this review, we'll look at real quickly an ETF's categories, fund benchmark, fund summary, expense recap, top holdings, and then finally we'll wrap up each ETF with the fund performance. So first off is ticker SPGP. This one is a large cap growth with Invesco, indexing off of the S&P 500. So this fund family works off of the growth sector of the S&P 500. The expense ratio on this one is 0.33. So that means for every $10,000 you have invested, it's about $33 per year. And then what do you get with this one? You get, first off, 75 stocks in total. And then top 10 holdings include CF Industries, Diamondback Energy, Steel Dynamics, Nucor, Vertex, Marathon Petroleum, as well as Contera Energy. In this one also, I was able to quickly tell you guys that give you a breakdown of the sectors that are involved. You've got some energy, some information technology, some materials, consumer discretion, healthcare, industrials, financials, consumer staples, communication services, and then finally rounding out the bottom percentage, real estate. Jump into performance. You have a 1 year of about 20.3, 3 year of 12.2, 5 year of 17.81, and 10 year of 14.42. And then since inception, this fund has averaged about 15.9. So if you've been with this fund since the very beginning, you would have had about 15%. That is fantastic. Next up, we move into our iShares Morningstar Mid-Cap Growth that goes by the ticker symbol of IMCG. So again, that's IMCG. It's a mid-cap growth, and this one is based off of mid-cap companies that have a market capitalization of $2 to $4 billion. Further, let's call out this ETF has an expense ratio of really good of 0.06. So that means for every $10,000, it is actually $6 per year. Every $10,000, $6,000. And again, this fund is merely tracking mid caps that have a broad valuation of $2 to $4 billion. Let's look at those top 10 holdings. You've got CrowdStrike, Workday, Autodesk, Marvel Technologies, Public Storage REIT, that's a REIT, Dexcom, Edward Life Sciences, and Index Laboratories. And that's pretty cool. And then sectors, you've got industrials, information technologies, healthcare, financials, consumer discretionary, and real estate, consumer staples, communications, materials, and utilities. All that with just one fund. It's pretty diverse. And let's take a look at that performance. Okay, performance on this one. The 1 year, 20.82, 3 year, 1.11. 5-year, 15.34. Our 10-year, 11.05. And then since inception, 10.55. See, all this available to you. Anyone can invest in this. Moving into our third fund, we have an iShares Small Cap that focuses on S&P 500, 600 Growth Index. That's the fund benchmark in this case. And then what do you get with that? An expense ratio of 0.18. And that means for every $10,000, you have roughly $18 of annual expenses. And this index fund is goes by the ticker of IJT. This fund currently has roughly 362 stocks in it. Big companies that make up the top 10% include Elf Beauty, Applied Industry Technologies, Ensign Group, ATI Inc., Mueller Industries, and Double Verify Holdings Inc. Industries involved in this ETF include industrials, consumers discretionaries, information technology, healthcare, financials, materials, energy, real estate, consumer staples, utilities, and finally there's some cash reserves as well. And then performance on this one is not too shabby. You've got performance of 1 year of 16.97, 3 year of 4.09, 5 year of 10.18, and finally the 10 year of 8.75. And since inception, you have 8.76. Moving on to our very last fund that goes by the ticker of XSD. Again, this is the SPDRÄ's XSD. This is a sector technology semiconductor. This one, fund benchmark, is the semiconductor sub-industrial portion of the S&P overall total market index. So this one has an expense ratio of roughly 0.35. So that means for every $10,000, you have about $35 in expenses. And again, this ETF seeks to closely match the returns characteristics of the S&P Semiconductor Industrial Index. Companies that are in the top 10 holdings, and keep in mind this one only has 39 holdings, but the top 10 include First Solar, Max Linear, Broadcom, Intel, Advanced Microchips Devices, Marvell Technologies, Micron, Allegory, Lattice Semiconductors, just to name a few. And now let's move into the performance. Let's check it out. So your 1 year was 34.83, 3 year 9.98, 5 year 28.76, and then 10 year was 22.74. So we're going to move it now to the spreadsheets. Again, we're going to take a look at what happens if you invested in all four for 5 years consistently for an even dollar amount. Let's see what the balance would be. Jumping into the spreadsheets, let's take a look at what this small portfolio of 4 ETFs would look like if you invested consistently over a 5-year span and a 10-year span. For today's analysis, we're going to say that the person did about $500 per month. So that'd be 500 times 12, and so roughly $6,000 per year. And as a recap, again, we're doing the Invesco S&P 500 that goes by ticker of SPG. Then the iShares of IMCG, then iShare of IJT, and then finally the SPDRÄ of XSD. And then for the first one, Invesco, you have a range of 1 year of 20% and then over 10 years of 14.42. And then for the Morningstar Midcap, the iShares Morningstar Midcap, you'd have 20.8 and a 10 year of 11.5. And then the iShares Small Cap, you would have a range of 16.97 on the 1 year, ranging all the way up to a 10 year average of 8.75. Finally, our Semiconductors, this one had an average of 1 year of 34.83. Again, that was a banner year for semiconductors. And then a 10 year of 22.47. Again, that's 22.74. So in our 5 year, we would have a total of 51,000. That's what the balance would have been. And how's that broken down? You would have invested about $30,000 in cash, and then $21,000 would have been in straight growth. So 58% in cash you invested. That's your principal investment of all four equally over this 5 year span. And then the growth on that would have been about $21,526. Now let's see what happens if you switch this over to a 10 year. Whoa, 141. That would have been your total balance. Let's walk into that. Okay, 141. Over 10 years, you would have invested $60,000, making up about 43% of this portfolio. Your growth would have been $81,000, making up about 57% of this portfolio. So you would have had more growth than actual investment. And that's the power of compounding interest. So consistent investing over a period of 5 and 10 years can see some major results. And again, the 10-year, you would have seen some good average numbers. Let's see what those are again. One more time. Your 10-year returns on the first one, your Invesco would have been 14.42. 10-year on the second one of the mid cap, 11.05. And then 10-year on the small cap, 8.75. And then finally, the 10-year on the Spider Semiconductor would have been 22.74. Hope you enjoyed the review. See you in the next video. Again, please like, subscribe, and share. And keep preparing to invest for yourself. Hey, thanks for staying to the end. This video is brought to you by the Next Chapter team. If you enjoyed the video, please drop a comment. Please also like, subscribe, and share for your friends and family. This will help the channel reach out to more people just like you. We offer one-on-one coaching where we work with everyday people to determine a clear path to achieving their financial goals. This includes things like budgeting to reduce debts, planning for big purchases, and even learning how to build wealth with the tools that you have readily available to you. If you're interested, please see our link below to schedule a free call with our team. That's right, it's a free 30-minute call with the team. Also, check out our affiliate links for high yield savings account. This is a great place for the saving up for those big purchases and your emergency fund. Thanks, and see you in the next video.